It's Market Day Report, and we're starting with cotton here. Good place to start. Cotton market is up 41 points at 80.83. Now, we're roughly in the middle of the trade range here, but this December contract for cotton has gained over a penny now. Let's see if we can look at the 1 month graph here, the chart. Yeah, we're up 145 points. That's 1.45 cents over the past month, trading 42 points higher right now on the session at 80.84. You know, I'm going to keep this going as we work our way through. Just looking at the new crop contracts here in September on spring wheat, look at that. We're up 65.75 cents on the 1 month chart for September spring wheat, 7.2825, and we're up 3.4% here on the session. Winter wheat, September, and we've gained nearly $1.24. This is up 19% over the past month. We're up over 30 cents right now at 7.6375. Here's a 1 month look at Chicago wheat, up 97 cents, 704.5. It's up 26.5. Here's a 1 month look at November beans, up nearly 95 cents. 12.3625 today. We've gained 13.5. And finally, the corn market. Here's the 5-day look, but look at the more impressive 1 month look. We're up over 44 cents, 4.8375, up 8.5 today. Luke Lloyd's with Lloyd Financial Group, Chris Robinson, Robinson Ag Marketing. And Chris, have we finally hit targets here on corn and beans?
Yeah, absolutely. I mean, this is the soybeans, new crop soybeans at 12.40. We're back to Christmas 2022, 3.5-year highs. You've got wheat on fire because of what's going on between Russia and Ukraine. It's finally catching on here, and we're at 2.5 to 3-year highs. Get after it. We're just on our heels on June 30th. We're up well over $1.20 in wheat since that low. We're up 60 cents off of our low in corn. We're up $1.25. We were at 12.25. We were at 11.25 in Novi beans the night before the Acres report. And here this morning we're hitting 12.40. 12.41 is the highest price we've had in 3.5 years. So get after it. Make some cash sales. Make it a cash sales, not call it a top. I'm not going to sit here and call it top because if we get continued weather issues, yeah, we can go higher. But if you're a farmer or producer, you're a speculator, you're always bet long. This is a gift. Get after it.
Okay, Luke, over on the equity side, what's happening there?
Well, talking about all-time highs or going to highs or talking about selling the top, I'm looking at oil, Chris. I mean, oil's back, above $90 a barrel? And now you're having the equity markets get spooked again a little bit. You're seeing interest rates continue to go up. You're seeing inflation expectations rise. I mean, we haven't seen anything break. We talked about credit spreads yesterday being tight and more liquidity. Nothing's really signaling like something's wrong, but all it takes is one thing to start breaking, and then everything snowballs. Are we close to that in any kind of way, Chris?
Well, I mean, there's a disconnect between the outside markets, the stock market, and the bond market. We're really, if you're looking at commodities right now, the row crops are in a weather market and in a demand market. Now, if we start getting much higher interest rates, I saw the 30-year mortgage rate is at the highest it's been in a long time, just under 7%, I think. So that could start to weigh on longer term. But for a producer who's been lamenting low prices, this is a gift. Can we go higher? Yeah. I mean, are we going to go see $110 barrel oil again? I don't know. It's possible. Every night we go to bed.
I don't think so.
6 weeks ago, the war's over. Now it's back on. Where are we going to be in 6 weeks? I don't know. But you're right. We're kind of that big game of Jenga. You know, what's going to be the thing that's going to have a correction? And you talk about the stock market. Stock market hasn't had a really solid 10 or 20% correction that's lasted more than a week in a long time. So we could be setting up for that.
Because the government knows how to bail it out.
Yeah, it's only July. You know, we got to get through October, right? Everybody gets scared in October.
All right, quick break. Back with more on Market Day Report. My kids have always done a pretty good job of trying to keep me with today's lingo, if you will, the verbiage, right? Well, I'm sure I'm now 10 years behind when I say the cheddar or cheddar as we talk about money flow, right? But it's a good tie-in to Class 3 milk, which is, yeah, cheddar, the cheese, the real cheese here. And the August contract at $17.93, it's up 35. You see gains there in 18s now as we work our way back into the protein sector. How about hogs? Hogs have been higher, and we stay there. The August up just 7 cents, tight range here, 101.57. Feeders, however, well, haven't looked so good. We're down 767 on the October, trading 331.90. Front month August, 343.12. It's down $6.42. And live cattle continues to slide. We're at 224.27, down 240. Luke Lloyd Financial Group with us. Chris Robinson Ag Marketing. I said slipping. Chris, it's like a slip and slide on the downhill.
Yep. Glass half full, though. If you look at fat cattle, live cattle, back in November, we were at 198. We topped out at 251. This level, 224, we're halfway back. So it's going to be a big battle level. The funds are all long. We'll know in a week or two, is this going to be a dip to buy or is there another leg to go? But I'm watching the fat cattle very, very, very closely. It's been a big sell-off. We've gotten hammered here in the last 10 to 12 days. Some guys are trying to call a bottom. I would look at it this way. Defend what you can. There's still a lot of meat on the bone. And, we have not had a big stock market correction yet. I think that's the biggest thing I'd be concerned about with the cattle market is if we ever got really I'm talking about a 2 or 3 week slam in the stock market. I think that will put pressure on cattle.
Okay, Luke.
Honestly, 10% corrections happen a lot. It's actually very common to have 10% corrections in the equity markets. We just really, like Chris was saying, we haven't seen one in a very long time. I think maybe March of last year was the tariff tiff, but it came back in 2 months. So we might get a 10% correction at some point this year. But the overall fact is earnings have been very, very strong in the stock market the past 3 days, last week with banks, as more tech stocks report and they talk about how AI is delivering more ROI than a lot of investors expect. I think you're going to see a rock star earnings and then the next leg higher, specifically in the NASDAQ in a lot of ways.
All right, Luke Lloyd Financial Group, Chris Robinson with Robinson Ag Marketing.